Also welcome everybody to our fifth roundtable here in Zurich regarding crypto assets 2024, the promising path ahead. We have investors here and partners today, as well people joining from Hong Kong and Dubai online. And I will just make a quick introduction about FiCAS and the company, a little bit about the agenda. So today we will talk about the market, the review, and give a little bit about of an outlook, as well about the psychology behind crypto, the market cycles, and the intrinsic value of digital assets. We have also a promising guest here, a new portfolio manager, and he will also present himself and a little bit about the strategy, how he manages the money, and as well a new product which we are launching together. For those who don't know me, I'm the head of sales at Bitcoin Capital and FiCAS since 2021. I am very proud that we have achieved till today a lot of growth. So we signed a few partnerships with asset managers in Zurich and Geneva. We raised also some significant amount of capital. Investors are quite happy so far with their investments and the performance. So we will talk about that as well a little bit today. Regarding FiCAS, so FiCAS is a purely focused crypto asset manager. We do only crypto investments. So we bring a lot of expertise and research in the crypto area. We are FINMA licensed, and yes, we launch like ETPs, ETIs with partners and investment managers. Most of the partners are multifamily offices and private banks as well. Bitcoin Capital on the right side, you see is a company, more an issuer, so it's fully owned as well by FiCAS, and it is serving the purpose of launching our own investment products called ETPs. That's so far. And the next slide. So yeah, myself, I already mentioned. Then we have here Halan Carrere, as already mentioned before. He will take over later the presentation. And Marcel Niederberger, our CEO. And we as well have Mattia Rattaji, our chairman of the board here. So I pass the word to you, Marcel. Enjoy the lunch.
Thank you, Alex. Quickly about myself. So I joined the crypto space in 2016, almost 8 years ago. I usually make a lot of educational presentation like today. So let's dive into it. First, we start a little bit with market review. What happened last year in the market, what is happening today. So going back to the beginning of 2023, we have seen Bitcoin ordinance launch on the Bitcoin blockchain. So basically also NFT started on the Bitcoin blockchain. Previously, we just had it on the Ethereum blockchain. So it was another use case for Bitcoin. We have also seen the price moving up from 17,000 to 30,000 in April. We came out of the crypto winter. I think 2022 was not a good year for crypto. We have seen FTX going down, but the market still was growing, the space was growing. And the interesting part was we have seen many providers filing for ETFs. So in June 2023, we have seen many big asset managers like BlackRock, Fidelity applying for a Bitcoin ETF. We have also seen this in the past. We have seen Grayscale, which is the first Bitcoin trust launched in 2013, tried it for many years and they always got rejected. So once we have seen BlackRock entering the space, SEC opened it up, they started discussion, and basically other asset managers also applied, like Franklin Templeton filed for ETFs. In total, we had 11 provider applying for an ETF, which were then launched in early January, which was a little bit a surprise by the market. Nevertheless, we have also seen companies like MicroStrategy. They started in the COVID in March 2020 to start buying Bitcoin as an inflation hedge. So I think he earned a lot of criticism about it. But in the end, as of today, it's almost the largest public holder of Bitcoin with over 1%. And yeah. Going to the next slide, Bitwise, which is also one of the ETF provider, made a survey. And the survey was quite interesting. So they asked the people, what do you think? Will the ETFs come? So the interesting part was that only 39% of traditional advisors were thinking they will approve the ETF. So the rest of it, we also had these conversations many times. People believed there will be no Bitcoin ETFs. Otherwise, some specialists of Bloomberg, also crypto experts, like we do, we granted an approval chance of 90%. So we have seen many discussions with the SEC. We have seen the space evolving. So there was many reasons that they would approve it this time. Also interesting what Bitwise revealed, that once they would approve the ETFs, it could catalyze the market and increase the demand of investors. So going back a bit to a gold ETF. So what we have seen in 2004, when the first gold ETF was launched, there was much wider accessibility also for institutional investors. So we have seen once it was launched, over the past few years, it accelerated a lot and people were buying a lot of gold. Of course, we had the 2009 financial crisis, which was also a significant part why people bought gold. Nevertheless, we have here a short fact that once the ETF of gold came out, the market were very bullish for many years. Here we analyze the ETF flows of Bitcoin. So, excuse me, we have many charts in here. We just look at three important lines. We look at the orange line, which is the price of Bitcoin since the ETF came out. We also look at the blue line, which is the total net inflows measured in US dollar. The last one is the turquoise line, which is the grayscale ETF and Bitcoin Trust. So what actually happened in January, once these 11 ETFs came out, we have seen outflows and market went down. The reason for it is that, as I mentioned earlier, the grayscale Bitcoin Trust existed already since 2013, and it was an OTC product. So it was not an ETF, it was not a fund. It was basically not traded on an exchange, and there was also not a clear bid and ask for this product. So once it changed into a Bitcoin ETF, you had daily liquidity. So people had no lockup anymore. They can easily buy and sell it. So what actually happened is on the first day when they started, we have seen a net outflows in the Bitcoin ETFs. So that's why also at the start, the price declined. What we have seen after is that all the other ETFs had inflows, but nevertheless, we started with daily net outflows, price of Bitcoin went down. At some point, it was quite interesting. You can see the Turkish line here again. So after a few weeks of the start, they stopped selling and they also had inflows. So we have seen now the blue line is above and we have here inflows, net inflows of 1 billion. So what we have seen then in the last weeks and months, that all the ETFs had inflows, Grayscale is not selling anymore, Bitcoin price started to accelerate. It was also a bit a surprise for us that we already reached the new all-time high of Bitcoin. So it was one of the reasons why we reached 70K so fast. We have seen many, many inflows starting in the beginning of March. So you can see here we had on 1 week, we had over 4 billion net inflows. So what we basically predict is that in the next few months, years, whatever, we will have seen much more inflows. So Grayscale will stop selling or less selling, and all the others will have more increase into the ETFs. So in Bitcoin, it's all about supply and demand. This graph shows also, again, the orange line is the exchange Bitcoin balance on all exchanges over the world. The black line is the price of Bitcoin. So what actually happened since 2021 is that the Bitcoin on exchanges are decreasing a lot. So we have seen from almost 2.7 million Bitcoin on exchanges, we went down to like 2.2 million as of now. So what does it mean? It means that if the BlackRock ETF is buying Bitcoin, they will put it into cold custody. So they put it off the exchange, they secure it properly, and basically the Bitcoins are not tradable immediately. So that's one of the indicator we could use if we have fluctuation in the Bitcoin on balance exchanges. So we see a clear trend that maybe we see a supply shock in Bitcoin and there will be not so many Bitcoins available on the exchange. So it also doesn't mean that if we still have 2.2 million Bitcoin on exchanges, that they are in order or in selling. So they're just parked there and not secured. On the other hand, on Bitcoin, we have the supply side. So what Bitcoin has is always the 4 years halving. So basically, miners receive every 10 minutes 6.2 Bitcoin per block. So this is the reward for supporting the network and helping Bitcoin be stable, be secure, and making it possible to make transfers. So one fact is, on the supply side, it's actually a huge number. So every day, we have 900 Bitcoin getting mined. So I just made a calculation that we have a daily on the supply side, 63 million new Bitcoin getting mined, which is actually a huge number. So what is happening with the halving is that every 4 years, this reward gets halved. So as you can see here, we are in this stage at the moment. So miners receive still 6.25 Bitcoin. And what is happening soon, less than 1 month, is this reward gets halved to 3.125 Bitcoin per block. So if we take then the whole amount, we see that 450 Bitcoin a day is getting mined. My assumption was price stays the same. So the supply side will also be halved. So the total value went now down from 63 million a day to 31.5 million a day. So as you can see now on the demand side, we have many ETFs. On the supply side, we have less Bitcoin getting mined soon. Bitcoin hash rate. This is a little bit a complicated topic. So basically, again, we see the chart, the price of Bitcoin with the black line, and we see the hash rate of Bitcoin in orange line. the hash rate of Bitcoin is basically all the GPUs and mining devices supporting the network. And in an easy way explained, it's how you can measure the security of Bitcoin. So when I entered the space in 2017 with Bitcoin mining, everybody said, wow, Bitcoin is already so protected. It's a huge number here. So the network was already very, very secure. But what actually happened during the last 8 years, it increased heavily. So as of today, the network is even more safe, even more protected than it ever was. And the trends will not stop. So we have only seen once here in 2021, we have seen a sharp decline. The reason for it was that China announced that it will ban Bitcoin mining. So that was one reason where the network actually went down, the hash rate went down, but few months after it, we were exactly again at the same level and we increased again. So the trend for Bitcoin mining is clear. Coming to the adoption rate. So as of today, we have 10 million Bitcoin addresses holding a balance more than 1,000 US dollar. So this is a measurement we analyzed, and basically what it tells us is if we take the world population divided by the amount of wallets that has some balance on it, we calculate the adoption rate to 0.1%. So if we also take an example for wallets with a balance above 100K, it's, I assume, 0.01%, which is even less. So people always ask me, is it still early or not? So when I entered the space, it was also the same question. I also thought, I am late or not. Hash rate was at the top. Bitcoin price was at the top. The news said Bitcoin is on top. And I bought my first Bitcoin approximately at 1,000 US dollar. And I was like, I'm paying 1,000 for a digital piece. It was never a higher price and so on. So are you still early? I think so. Now we are coming to the sentiment of the market. So this is quite interesting for me personally. So basically, this is a Wall Street cheat sheet that has nothing to do with crypto. It's coming from the traditional market. Probably some of you have seen this slide already. So basically what is doing, it's analyzing a chart on a sentiment and the stage of the people. So what we have seen at the end of 2022 was the disbelief in Bitcoin. There was everywhere in the news, say Bitcoin will go to zero. The news reported negatively. People were afraid. And this is the stage where we had the disbelief. And then we have the recovery, going to the optimism, going to the euphoria. And then we are at the bubble and it's repeating again. So what I'm doing now is I just made a Bitcoin chart over it. So we are going back again to 2017 where I started. So I told you that I bought almost in this area. Bitcoin was never higher, but people were not talking about it there. So it was a good sign actually from the sentiment. Then what we have seen here is price accelerated. We saw here JP Morgan telling Bitcoin is a fraud. So we had this sharp correction of more than 30%. Nevertheless, we have seen a big price increase until we reached the euphoria level. It was quite interesting for me to, how can you predict that you are in the euphoria stage? So I'm living in Zug. I have the office in Zug. I have a good view on the train station. So what SBB made is you could buy Bitcoin at the train station, at the ticket system. There was the option, oh, I can go with the train to Zurich, or I can buy Bitcoin. So when we were looking out of the window, we have seen a huge queue of people standing there. They wanted to buy Bitcoin, not the train ticket to Zurich. So it was a clear sign that, okay, maybe we have seen a top, maybe we see a correction, and it perfectly matched with the Wall Street cheat sheet coming from the traditional market. Going further, what happened again? Bitcoin was dead again in 2020. We had COVID. Everybody said, oh, Bitcoin is again over. So it was the best time to buy. And basically repeated. So we have seen Elon Musk, we have seen many companies entering the space, putting Bitcoin on the balance sheet. Price accelerated quite heavily. So here was a little bit extraordinary because Bitcoin was accelerating already in May 2021 to a level where we have seen already a lot of retail people interest in Bitcoin. So here it was actually quite difficult to realize what is really the top. Was it already in May or was it here? In the end, nevertheless, I've seen again, it repeated again, we went down. So at this stage, the second biggest exchange went bankrupt, FTX. So we have seen all over the news again, Bitcoin is dead. So what happened now is again this scenario. So going to the next slide, where are we now? So if I'm looking at the window today, I don't see people buying Bitcoin at the train station, which is good. So what actually happened is we have seen now this institutional adoption with the ETFs, but many companies or institutional investors are not ready yet. They have to adjust policy. They have to have meetings about Bitcoin. Should we buy some? They don't know. So the clear trend for us is that we don't see the top yet. We don't see the bubble yet. So there is still room to grow for us. So this is just our indication, no financial advice, by the way. And what is important to say is at some stage, it will also repeat again. Maybe we don't see this huge volatility again, but there will be a time where Bitcoin is again in the news, like, okay, maybe the financial system messed up. Okay, it's now time for Bitcoin, whatever. So there at some point, the market will accept downside volatility again and will correct probably. So since I started in crypto, it was for me always a big surprise how accurate this is. So the sentiment of the market with a cheat sheet from the traditional market. So coming to our products and what we are doing. So a lot of people are still afraid of entering the space. They don't know, should they buy Bitcoin now? Should they buy later? They're confused. So basically what we offer is, hey, we are taking care of the space. We are analyzing the market on a daily basis. I just have spoken about Bitcoin now. There is also many other assets in the market that even perform better, have big use cases, and so on. So what we have achieved, or what is the target of the portfolio, is basically we want to manage volatility. So we had half of the drawdown that the market has, but we were still outperforming the market. So this is the both use cases. We take the decision when to buy, when to sell, which other assets, or should we leave the market? Should we go into cash? Should we hedge? Should we short? That's the idea of the products. To give a short insight to the performance of other assets, so we made a short overview of some assets that we are holding. So this is the base price we bought of some assets. So I think everybody here, wow, Bitcoin was performing so well. Is it already late? But the reality is there are so many other digital assets out there with huge use cases that perform even better. So we have seen on top, probably some of you heard of Solana, which had a massive performance, or some newer protocols that probably some of you have never heard of, like Sai and Sui, and some of them have even similarities. With this, I give over to Harlan, and Harlan will explain and introduce himself first, and he will basically explain the value of the cryptocurrencies. So with a short break, I will give over to Harlan.
Sure.
Yeah.
How do I do this?
Just over the years. Yeah, perfect.
Wow. Wow. Oh, that's really uncomfortable. Let me try it without it, and if people can't hear me, I'll do it. You sure? You sure? Okay. Okay, like that. Okay. Do I have to push anything, or is it on? Not sure what that red line on the screen is, but anyway, yeah. So what I'm going to do is talk a little bit about the journey that got me here. I've never actually made a presentation on crypto, so I hope you'll be patient with me. I'm basically going to try to tell you a simple story of my own investing experience and how I got to where I am, and maybe what the implications are for digital assets and how I think about them. Just want to make sure, can everybody hear me okay? I'm not used to wearing this headset. It's okay in the back? All right, great. So before I present, I just want to tell you what the overarching message that I would like to communicate to you. This is kind of the conclusion that I reached a few years ago, and where my conclusion has become more robust lately. Everything that I say will drive to this conclusion. The battle is over and we've won. That's the message. When I say we, I mean digital asset investors. So for a long time, when I go and talk to people, I've never made a formal presentation, but I have many one-on-one conversations. The discussion is around, are digital assets going to survive? Is this viable as an asset class? Is the government going to ban it? I can now say with nothing's 100% confidence, but as close to 100% confidence as I can have, it's over, we've won. To me, it's completely obvious. And it's so obvious that as I explained to you my sort of personal and professional journey, I'm basically betting everything on this. And, I don't have to, but I am. So the overarching message is the battle is over and we've won. And I'm going to try to persuade you of that. I will tell you a fair amount about my background because it's quite relevant. Why would somebody with my background go into digital assets full time? But so I think it's important. So again, my name's Harlan Carreri. I'm originally from Canada. I studied at McGill, and I studied behavioral economics primarily before there was any such thing as behavioral economics. So I worked with a professor there, and I studied many of the guys that went on to win the Nobel Prize for the work that they did in behavioral economics while they were still unknown. So I got interested in investing at a very young age. And generally, I ran a parallel track. My father bought me a stock in a Canadian bank when I was 11, and I simultaneously started buying stocks and options and designing clothes. Again, this will all be relevant at some point, but I've basically run a dual track my whole life, doing something in finance and something creative. And in finance, I've typically been involved in technology. So I've generally operated my whole life at the intersection of technology, finance, and creative industries. And this is very relevant to crypto. So when I finished at McGill, I started a clothing business. I designed clothes. I built a chain of stores. I sold it. And then I went to work on Wall Street at Goldman Sachs, doing general investing, but with an emphasis on tech. This was in the late 90s. So the first internet bubble was inflating at that time. I went to Harvard Business School, where I focused really disproportionately on finance to get formal training, on finance, particularly with attention to derivatives and how they could be applied in technology investing. I worked at a hedge fund while I was there, investing in luxury good stocks, sort of bridging, my previous expertise. Then I went to Fidelity Investments in London. I stayed there for 17 years. I was the head of technology investing and ran the global technology fund in London. And I was the head of healthcare investing in Boston for a while, running various healthcare funds. Generally speaking, I ran pretty large asset sizes in growth portfolios. These were portfolios between, say, $1 billion and $50 billion in growth assets. I left Fidelity in 2016. I got involved in the music business. I started a digital record label, and I started working doing technology investing at market neutral hedge funds. And this is when I started to get really interested in cryptocurrencies, because what happened simultaneously as I'd been on this journey that I thought made a lot of sense, right? I'm interested in art and music and design, and I'm interested in technology investing. So I've set my life up to pursue these things that I'm interested in. What I started finding was that all my best ideas were in digital assets. I was doing all this work, going to lunches in New York or London, where I'd sit in a room like this with really smart people, and we would all be trying to get an edge on a semiconductor stock. Really, really smart people. Like, I didn't consider myself any smarter than the average person at the table, and we're all competing to figure out a publicly listed $3 billion market cap semiconductor stock. And I think to myself, I can just buy Bitcoin for a few $100s. This is a home run. I have a huge edge. And so the long and the short of it is that around 3 years ago, I left the market neutral hedge fund world. I started transitioning the music business, where I'm the chairman, to embrace Web3 technologies and blockchain in how we help artists monetize their creation. And I basically went full-time into digital assets. The reason I give you this long background is that in my mind, it's a very, very logical continuity, right? I've done all the things that somebody interested in finance and investing would do. I went and I studied it at one school. I did a graduate degree at another school. I worked at a fancy investment bank. I worked on the buy side. I invested in technology, for almost 40, it's over 40 years now. And I did it all the traditional way and did all the traditional education. And now I've ended up full-time in digital assets. I have felt for some time that it was inevitable that digital assets as an asset class would win, but I now feel very comfortable saying we have won, right? And so I'm not into this opinion, but I'd like you to mark my words so that, if I do get invited back to speak again, I'd like to say, you see, I told you, to me, it's very, very clear, because we've taken certain steps that we can never go back on. They can't now ban the Bitcoin ETF in the United States. I can tell you from personal experience and personal connections, I know for certain that there are people that head up the largest and most important brokerage companies in the world that are personally invested in Bitcoin with a cost basis below $100. And they now control the largest and most important brokerage companies in the world. There is no going back. It's over. I'm not saying that it's all going to be smooth sailing. I think there's a good chance the ETH ETF, for example, gets rejected the first time around. But I do think for sure it's two steps forward, one step back from here. And I'd like to put myself on the line to say that. So one of the things Marcel asked me to talk about a little bit, I'll see if this slide is the right slide for that. Yeah, I guess I can talk through this. So one of the questions that I get a lot is that traditional investors don't really understand digital assets. And I'm really sympathetic to this, because the first time I heard the term digital asset as a technology investor, I thought, isn't that an oxymoron? Because one of the hallmarks of something being digital is that it can be infinitely replicated at almost no marginal cost. If you have a digital photo of a cute puppy, you can replicate it an infinite number of times at essentially no marginal cost. Therefore, how can an asset that is purely digital have any scarcity? And if it can't have any scarcity, it can't have any value. So I'm embarrassed to say that my first pass at Bitcoin, that's what I said. And I put it in the too difficult bucket and passed on buying Bitcoin, below $100. My first Bitcoin was around 500 and something. So I was not super early, but I wasn't super late either. But I did, like many people, I didn't get it the first time around. The second time around, I looked at it and I thought, wait a minute, I get it. This is truly revolutionary. You actually can have something that is digital and therefore has extremely low marginal cost to produce, and yet you can still have scarcity. And I kind of dropped everything that I was doing as I had this realization. And I actually moved away and quarantined myself for a little while to think through the implications of this. And if you think about it, big picture, again, as a technology investor, and you think, wait a minute, we increasingly live our lives in a digital realm. If you look especially at younger people, they're immersed in their phones. Their social life revolves around social media. They'll be using multiple screens at the same time. Their lives are increasingly virtual and increasingly digital. And if you think about the history of human progress and in terms of economic development, what was the most pivotal thing that happened to drive human progress and accelerate human progress? It was the invention of property rights. Right? It wasn't that all of a sudden our IQs jumped 20 points. It was the fact that people could keep the fruits of their labor. And when you can keep the fruits of your labor with ownership rights, productivity simply explodes. So the history of human productivity is pretty flat, and then it spikes when we develop property rights. Well, blockchain enables property rights for the digital realm. Blockchain enables property rights for the digital realm, and our lives and our economy are becoming increasingly digital. And this is the currency of the digital realm. Okay, I realize there are a few kind of slightly mind-bending concepts in there, but it makes sense if you stop and think about it. The idea that I would put to you is this: when we're trying to think about valuing a digital asset, I think that the first hurdle to overcome is to not try to analyze it as a traditional asset, because you'll quickly dismiss it as impossible to value. In traditional assets, we have a balance sheet. We can look at assets on one side and liabilities on equity in the other, and then decide whether we want to buy the debt or the equity of the company. When you think about a digital asset, the whole balance sheet sort of gets collapsed into something kind of unitary, into a single unit, where the equity, the possible debt that's used to finance it, and the product or the assets of the protocol itself are all one thing. And what you're buying is essentially fractional ownership of the asset and the equity at the same time. I think it's easiest to understand it perhaps by way of an analogy. We all know, I think, what AWS is, Amazon Web Services. So this is the cloud computing platform that Amazon offers, right? So if a big company wants their own compute, they can build their own infrastructure, or it's probably cheaper to rent this out on demand as they need it from Amazon. Well, something like Ethereum is sort of the same idea, except when you buy ETH, you're buying fractional ownership, both equity and asset at the same time, of the Ethereum network. So it's a virtual asset, but it's still at the same time a real asset that performs. It's a scarce software, hardware hybrid asset that generates cash flow. And if you don't obsess over whether it's debt or equity or some kind of strange derivative product or something like that, and accept that it's a unitary asset and you're buying fractional ownership in a digital good, all of a sudden, evaluating it, coming up with a value is not that difficult. So when I hear people say digital assets are worthless or they're unanalyzable, it's all a joke, I feel quite happy because I've assembled a team of analysts, including myself, that basically bring the same rigor that I would bring to analyzing stocks at Fidelity or a hedge fund or analyzing options or derivatives to digital assets. And frankly, we can value them. I'd like to just give you one example, and then we can run through the slide very quickly, because I think what you're going to see here is we analyze digital assets more or less the same way you would analyze an investment in a private company or a public equity. It's just that you're looking at metrics. I'd like to just give you an example of one cryptocurrency that I happen to be quite constructive on, and we can understand it by way of analogy to Amazon Web Services. The token is called Render, RNDR. And the idea with Render is that the token allows you to buy unused GPU capacity. So just to get everybody on the same speed, a GPU, generally made by NVIDIA, is a graphics processing unit. And right now they're in extremely high demand for performing AI tasks. So there's a huge shortage of GPUs globally. So what Render's developed is kind of like the Airbnb for GPUs. So if I have a GPU that I'm using to, design some clothes in my spare time or something, but I'm only using the chip for 5 hours a week, I can plug my computer into the Render network, and people can rent my GPU by the minute and pay me in Render token. So just like, you're renting out a spare bedroom or at a guest house on Airbnb, you can rent out your spare GPU capacity, and Render becomes the scarce native token of this ecosystem. Well, then it becomes a pretty straightforward financial analysis where you look at the TAM, you look at the growth, you look at the market share, you look at the cash flow, and all of a sudden you can value Render token. What's so exciting is I'm one of the only people I've ever met that's actually doing this, that's building financial models and evaluating tokens like this. Now, we can rest assured that 5 years from now, the sort of things that I'm doing will be commonplace. I know for a fact that many of the places I used to work at, are starting to build this functionality now, but they're going very slowly. So I think there's a unique opportunity at the moment to go and invest in digital assets when I know with 100% certainty, the big guys are all coming behind us, and there's an opportunity for us to get there first. I'll go through this one very quickly, and then I'll offer you some conclusions about what I'm actually doing. So you can just look at this slide and see that this is essentially what you would do if you're analyzing a big public company or a private investment. You analyze the market, the team, the product, the business model. You have some special economics to evaluate when it comes to blockchain, because as I said, it's not as simple as valuing equity. And you use whatever data you can find. So when you understand what it is you're analyzing, all of a sudden it becomes a little bit more straightforward. So where have I gone on this journey? Well, what's happened is I dropped everything that I was doing to devote myself to blockchain investing full time. I expatriated myself from the United States, where I'm not a citizen, but I was a resident, in order to seek friendly regulation. That's what brought me to Switzerland, and that's what brought me to FiCAS and Bitcoin Capital. I think it's worth emphasizing that I could have gone anywhere I wanted. I have a Canadian passport and I have experience in the industry, but I chose to come to Switzerland for the friendly regulatory environment, and I chose to partner with FiCAS and Bitcoin Capital because of the strong infrastructure that they've built. Crypto is exciting enough that you don't want exciting infrastructure. You want, boring, highly compliant, well-regulated infrastructure that's never had a problem. And I was impressed with their record of never falling victim to any of the collapses that happened in the last cycle. And I felt that this was an ideal partner for me to commercialize some of the products that I have in mind. So at the moment, my firm, Coded Capital, which is based in Zug, we're directly managing, advising on, or overseeing about 1.4 billion of capital. I've put more than 60% of my net worth into the strategies that we're managing, and a good portion of the rest is invest passively in crypto investments where I don't have options to control it. So I've really put my money where my mouth is. And what I'd like to do is just tell you a little bit about two strategies that I'm running myself right now, both of which I'm looking to commercialize with FiCAS. And if anyone has any interest, I'd be happy to answer some questions. This is the first strategy. And the idea, this is called the Digital Long-Term Winners Fund. I haven't fully finalized the name, but I just want to tell you what we're doing here. I think it's something that is readily understandable. So at Fidelity, I ran funds like the Fidelity Global Technology Fund, or the Fidelity Magellan Fund, the Fidelity Select Wireless Fund, or Select Biotech Fund. And the mandates of these funds were difficult to deliver, but simple in concept. And the idea was anybody can buy the index, can you beat the index? And it was very competitive to work there. And if you could beat the index, you were generally well rewarded for beating the index, because it's a big deal. If you beat your stock index by 3% a year over 10 years, it makes a huge difference, obviously, in what you're able to deliver in total returns to your investor. So I said, I'm going to build basically the Magellan Fund or the Contra Fund or the Fidelity Global Tech Fund of blockchain investing. Nothing fancy, no leverage, no options, no short selling, no swaps, not employing any of the tools that I employ in, in hedge fund land. I'm just going to buy, hold, and where possible, stake these assets. So we seeded this strategy July 1st, 2002. The intent of this, of timing, was deliberate. We felt it was, we didn't know it was the bottom, but we thought we were pretty close. Since inception, the chart and the table slightly don't match because the table is more up to date through this morning. We just inserted that this morning. Since launching the fund, we're up a little over 400%. We're outperforming the S&P crypto index by 264%. We're outperforming the CCI, which is the main crypto benchmark, by 245%. And the ones that a lot of you would care about, like Bitcoin, we're outperforming by more than 140%. And what this is a concentrated portfolio where we typically hold around 20 positions, as it says, 10 to 50. We keep it invested in larger cap securities or larger cap cryptos. And again, we manage this the same way I would manage a technology growth fund in a mutual fund format, much more conservative than a mutual fund. So these are returns that are achieved without leverage. I include one other benchmark there at the bottom, which is versus the QQQ, which is the NASDAQ 100 index. Because a common question I get is, why do I need to invest in crypto? I can just invest in the NASDAQ and do very well. You can do very well in the NASDAQ. Since we launched, the NASDAQ is up 57%, but we're up 347% more than that. So again, I guess I just want to underscore the point that I really am putting my money where my mouth is. I have what, for me, tens of millions of dollars, which is significant for me, invested in either directly in this strategy or more adventurous leveraged versions of this strategy. And this is a product that I've chosen to partner with FiCAS and Bitcoin Capital on because basically they to me what I thought was really robust infrastructure that will allow me to implement this strategy. And I'll be bothering Marcel to try to launch as quickly as possible. But in the meantime, we continue to manage it on our own. There's more details here in the presentation, but I can maybe just illustrate sort of one example because I want, as much as possible, for crypto investing to become more relatable to people, where I'm speaking a language that investors can understand. Let's just look at the trade example on the right side for a moment, because I think this is an example that just really draws on general investment experience and expertise developed over some period of time, particularly in technology. So we were looking at Solana, which is an alternate layer one. So it's a competitor in a sense to Bitcoin or ETH, but really it's a competitor to ETH. And I'm just simplifying for sake of discussion. ETH is generally seen as a very secure, very established, but very slow and very expensive. So secure, but slow and expensive. Solana, less stable, but very fast and very cheap. So, it's a matter of trade-offs. And I think that one of the insights we had just from being longtime investors in technology is that there's a season for everything. And as the market became more risk embracing, fast and cheap, but maybe not so stable, is something that investors might have an appetite for. And it was also coming from a very low level because Solana was closely associated with FTX. FTX was one of their major backers, and people worried that as FTX collapsed, maybe Solana would collapse. Anyway, we spent a lot of time researching this. There's a lot of data on chain where we could see what kind of activity levels were happening in Solana. And we made what was, a very bold decision for someone competing with a benchmark, we went to owning 0 ETH. So I'm not that familiar with the Swiss market, but I imagine owning, 0 ETH would be like owning, 0 pharmaceutical stocks in Switzerland. Like, it's a very, very bold bet. It was probably 15 or 16% of our index. Solana was 1% of the index, and we chose to own no ETH and lots of Solana. And, it was a very good call. The reason I illustrate this, because of course we get plenty of calls wrong as well, but it's not so much to say, hey, look at us, we were right about this. What I'm trying to say is, hey, look, we're not doing anything magic here. This isn't a black box. This is fundamental investing, looking at fundamentals, making informed decisions, analyzing risk and return, and then investing accordingly. I guess just the one other product I want to mention, I'm not sure that I have a slide on it, is we've had a lot of demand as well for stable income products, and I do manage a fair chunk of money in these types of strategies as well. So I just want to touch on it briefly, because I think from an asset allocation standpoint, whether you're interested in the product now or not, I think it's worth understanding that it's out there. Meaning, if you just think about the crypto market as, for the moment, kind of a closed system, that means that there's a shortage of US dollars inside the crypto ecosystem, right? So if you want to get onto an exchange and borrow money to buy Bitcoin, you have to pay a very high interest rate in order to borrow money and buy Bitcoin, because there's a shortage of capital. Try getting your money into crypto. It's not that easy. There's a lot of pitfalls. What that means is that right now, there are tremendous opportunities to make attractive returns, making fully collateralized or over-collateralized loans in crypto. It's actually quite simple. It's a lot like collateralized lending in real assets, but it's actually much easier because everything occurs in a way that's completely computerized. You don't have to manually foreclose on someone's home. You simply take their Bitcoin if they don't pay back the loan. And so we're achieving sort of 1 to 2% monthly returns at a very, very steady pace, while taking essentially no risk, because everything is fully collateralized. And so the two products that I'm looking to cooperate with FiCAS on are, one, an aggressive product that will be highly volatile, where I think you can beat the returns of Bitcoin quite handily, and a second product for preservation of wealth, where I think you can make very good conservative income returns, which turn out to be double digits. But anyway, to just conclude, I guess the message, again, that I want to try to get across, and I hope it comes through in my conviction, is I do believe that the fight over the viability of crypto as an investment class and digital assets as an investment class is basically over, and we've won. And I feel quite strongly that it's a good time to be investing, whether it's with us or with somebody else. I think this will be an asset class that's 10 times bigger at this point in the next cycle. And we know investors are coming in behind us, and we'd like to be there early. I thank you for listening and being my first audience to make a presentation. I do appreciate it. Thanks.
Just a few words to conclude. So before we move to the Q&A session, so we are at the start of the bull market. We have a very well experienced team, and we are very happy to follow up with any of our guests after the Easter break for any relevant investment conversations.